This is Dr. Ali, Faculty Department of Commerce and Management Studies, Aditya Degree and PG Colleges, Kakinada. The topic what I have chosen for MBA students, those who opted finance as their specialization, it is one of the important paper for MBA finance students, that is tax management. The topic what I am going to deal today is tax management. This subject contains various direct and indirect taxes. First unit covers Income Tax Act 1961. Under this unit, there are many topics like basic concepts of income tax, residential status of individuals, companies, firms, association of persons, etc. What is agricultural income? What are the incomes incidental to agriculture but not agricultural incomes? What are the exemptions given under Section 10 of IT Act? It also covers various heads of income, like income from salary, income from house property, income from capital gains, income from business or profession, income from other sources. Let me give elaborate explanation about Income Tax Act 1961. First of all, let me start from the basic concepts. Under the topic basic concepts of income tax, first of all, we should know what is income. Generally, Income Tax Act deals with various sources of incomes like income from salary, income from house property, capital gains, income from business or profession, income from other sources. Next, who is SSC? SSC means the person who is liable to pay tax under the head Income Tax Act 1961. Not only paying tax or any other sum of money like interest, penalty, whatever he has to pay to Income Tax Department, then he will be treated as SSC. Even deemed SSC is also come under the definition of SSC. Deemed SSC means actually he need not pay tax, but on behalf of someone he has to pay tax. For example, for minor's income, minor's father, parents or guardian is liable to pay tax under the head income tax, under Income Tax Act 1961. So even deemed SSC is also an SSC. And then what is agricultural income? Let us know. The income which we derive within India out of land. The land must be used for cultivation, and at the same time the land must be situated in India. There are three conditions to be observed for considering an income as agricultural income. First thing, income must be derived from land. Second, land must be situated in India. Third one, the income may be rent or revenue. What is the difference between rent and revenue? Suppose if at all we let our land to some tenant and he paid money or the proceeds of the crop, then it will be called as rent. Revenue means directly if at all we cultivated the land, we sold the goods, we sold the crop or yield in the market, then whatever the income we derived, that will be called as revenue. Anyway, you should earn this income on land. But whether you have done the cultivation or agricultural process in your land or not, there are two conditions to be satisfied. one, primary conditions and secondary conditions. Primary condition means tilling the soil, sowing seeds. These are all come under primary conditions. Secondary condition means when the seed sproutens and sapling comes out from the seed, or seed germinates, a new sapling comes out. Thereafter, whatever the activities we do for its growth, its harvesting, or till the yield collected, all these operations come under secondary operations. See, there are certain incomes which we may derive on land, but they are not agricultural incomes, like pot making, brick making, tile making, poultry farms, aquaculture, pisciculture, horticulture. All these activities, they are not considered as agricultural incomes. What is the specialty of agricultural income? Under section 10 of Indian Income Tax Act 1961, agricultural income is free from tax. Means we need not pay any tax on agricultural income. Now let us start about the residential status. Basically, when we take the individuals status can be classified into three categories. One is ordinary resident, not ordinary resident, and non-resident. Whether he is ordinary resident, not ordinary resident, or non-resident, to determine his status, we need to take two important conditions into account. Condition 1, there is a primary condition. Condition 1, he or she must stay in India at least 182 days in the previous year. There is a primary condition 1. Our primary condition 2 is there. He or she must stay in India at least 60 days in India and 365 days in the preceding 4 previous years. Additional condition 1, he or she must stay in India at least 730 days out of 7 preceding years, or 2 years continuously out of 10 preceding previous years. If at all you can satisfy at least one basic condition and one additional condition, you will be treated as ordinary resident. Suppose you have not satisfied any additional conditions, you have satisfied only one basic condition, then you will be treated as not ordinary resident. If at all you fail to satisfy at least one basic condition, then you will be given the status non-resident for this previous year. So that is about residential status. Thank you viewers for viewing this video. I'll continue this session in part 2. Thank you very much.